You're failing your prop firms because you're inconsistent with your trading, your risk management, and you don't properly stick to a plan. I'm going to dive in today some of the tips that have allowed many of my students to pass prop firms and get payouts just like the ones I popped up above. But before we get into that, I'm sorry. I know I haven't been in here for like 2 months posting a video. That's why we're coming back with the best strategy video on how to pass your prop firms and how all my students and I do it as well. Let's dive into it. Well, before we get into the nitty gritty and really the specifics of risk management and consistency, let's show you guys a simple strategy that I use for the New York Open trading YM, US30, NQ, Nasdaq, ES, SPX. This is a perfect setup and I believe you guys can learn a lot from it. So what's the first thing I do? I mark up the charts at 6:20 a.m. Pacific Standard Time. The market opens at 6:30. I only take a trade after that 6:30 market open. So what do I do the first thing? I'm coming onto the chart. Well, I like to zoom back a few days and get an overall idea of where price is going. I can see prices gently moving in an uptrend. So I have my first bias. I'm looking for a buy on market open. Not to mention, let's look here. This double top that was created over here at 615, 610 is rejecting the same area with a 1 to 5 point range as over here, price previously rejected. So we know if price breaks above this structure at open, it has a high probability of going to at least a 1 to 3, 1 to 2.5 with our set stop loss. What's the next thing that I notice here? Well, at 6:25 in the morning, we have what I like to call a liquidity grab. So what does that mean here? Price is coming back down and taking out stop losses. Common stop losses are going to be here. So let me draw that up for you. I also like to think of this as a break and retest and a rebreak of structure. So let's draw that up. So what do we have here? We have price creating a resistance right here, pre-session. Price go ahead and breaks through this, comes back up, makes another resistance, comes back down, retests that now support, which was a resistance. Now, as price at open, since it's already grabbed liquidity, we're waiting for a re-break of structure to the upside to enter in long or for a buy. So let's see how this candle played out so we can check out where we would have entered here with our biases and how we broke down this trade. So at 6:30 on YM, US30, we could see price immediately has a fuck ton of volume comparative to pre-market. Almost all the time at the New York Open or the sessions opens, their respective countries' top indices, indexes, whatever you want to call them, have a surge of volume at that country's open. So how do we capitalize on that? We look for key breaks of structure, key signs that price is going to pick a direction and go for at least a 1 to 2 to 1 to 3. So what type of stop loss do I use here? Well, I would enter right after price broke past this wick right here as it broke structure. Now, what type of stop loss do I use on US30? Personally, I like to use a 30-point stop on YM. Now, what do I target? Anywhere from 60 points all the way up to 90 points. Let's see what this trade played out to do. Easily hit the 1 to 3. Now, how can you use this strategy to pass prop firms? Let's go ahead and dive into that. So there's a few different things we need to break down. Concepts you need to know so you can properly risk manage and show consistency with your trading. One thing is I only like to take 1 to 2 trades per New York session. If I make my first trade, I don't like to take a second trade unless it's an A+ setup, as you guys have seen me doing in the live trading. Now, what is risk management? It basically means how much am I risking to how much can I make. So if I risk $1 for a 1-to-1 risk to reward, I can only make $1. If I do 1 to 2, I'm risking $1 to make $2. 1 to 3, risking $1 to make $3. Very simple concept. Of course, there is spreads and fees, and when you get up in price, that is negligible. So once you're hitting 1 to 3s, that's negligible to our consistency and win rate. So let's say we trade 5 days a week. We take 1 trade per day in New York session at that open or 15 minutes after the open whenever you see volume is consistently coming in. Sometimes you may need to adapt that to 5 to 10 to 15 minutes after open. And we have a, for this example, 60% win rate, which I've had this month, 62 to be exact. So we're just making this simple here. 25 trades and a 60% win rate means I'm taking 15 wins and 10 losses. Now let's say I pull out at 1 to 2 only, because that's the minimum I like to pull out at. That means all those wins right there are equivalent to 2 of whatever percentage I'm risking. So to go into this more in depth, let's go into a popular prop firm's rules needed to pass and how you can use this to pass the account. So if we have a 50K top step account and we're trading NQ or YM, we have a max loss limit or max drawdown of 2,000. We have a 3,000 profit target. Now for NQ, 1 contract is equivalent to $400 for my stop loss. My stop loss on NQ is 20 points, sometimes 25 points, which would be 80 to 100 ticks. Obviously, we're targeting 160 to 200 ticks. So, how can we risk manage to pass this? Well, personally, I don't really lose more than 4 times in a row, so I need to give myself at least 4 shots in my chamber. This means I am going to risk 500 or less per trade to be able to pass this account. Back to the consistency and win rate. If I have a 60% win rate, I take 15 wins and 10 losses. So how much am I losing total throughout the month? 10 times 400. That's 4,000. How much am I winning this month? Remember, we're pulling out at 1 to 2. So we have our 1 contract, which is $400, times 15 times 2. Or we can do the $400 times 2, which is $800 per win, times 15. Now that is 12,000. So for the month, we would clear $8,000 with a 60% win rate. We need to give ourselves that 4 rounds in the chamber to be able to pass the evaluation account to get to live. Because you will take losses trading. It's just a matter of managing your risk. You will take losses trading, but if you keep the losses and the percentage low, then you can pass the account and take losses and still become profitable. That is the key to risk management and consistency. That is really the advantage to risk managing properly. If you guys do want to join and watch me live trade and hit bangers like this and get paid out like all my students, I've opened it up for a week for free. I'm so confident that you'll make money. You can click that link down below and join and check it out.